Welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me now is Janney Montgomery Scott, Director of Research, Christopher Marinac. Also with us is Mark Tepper this morning. Christopher, good to see you. Thanks so much for joining the conversation. And I want to get your take on what you're seeing there in terms of research on markets and the economy in the year ahead. Look at futures indicating a fractional move this morning. Of course, we know that it is a holiday-shortened week. The market will close at 1 p.m. Eastern tomorrow for Christmas Eve. Bond markets will close at 2 p.m., and both equity and bond markets are closed on Thursday, of course, for Christmas Day. All three major indices ended higher yesterday, and that erased any losses for December. And we're talking about double-digit gains year-to-date for all the major averages. The S&P 500 on track for an 8th consecutive monthly gain. This is the longest winning streak since 2018 as technology leads the way, despite periods of volatility. Your thoughts on 2026? Does this melt-up continue, Christopher?
I think it does, Maria. I think liquidity is still very strong in the marketplace with money market funds 12.5% up year over year. Bank deposits are 3.5% stronger. There's still cash to reinvest into the marketplace. I think that bodes well for stock prices. I also think that while volatility has been higher for the S&P this year, and we should expect more of that in 26, I do think the opportunity for the economy to move forward is still quite good. I think some of the roadblocks of the past 6 months are going away. I think tariffs are understood. I think the economy is going to continue to march ahead. It may not be as strong as we'd like, but it's still going to be strong enough. And I think in the bank financial channel, you have a lot of positive things happening with deregulation and particularly with loan growth getting better.
Yeah, and you cover financials. You've been making the case that banking could be a bright spot in the new year. I mean, we've been talking all week about the potential for a big move in IPOs. And of course, President Trump's agenda is very important here because he's deregulating. Are those the reasons you think financials will be a good spot next year, a bright spot?
Absolutely, and I also think that the blocking and tackling in the banking system across all asset sizes will be very good. I think deposits rising is a good omen. I also think the loan demand is strengthening, and I think some of the activity in private credit is going to shift back to the regular way banks, and I think that incrementally is creating more demand.
And Mark, I want to get your take as well, because so far it's been all about this AI trade, but you also have said that you expect things to broaden out. Look at healthcare, and in particular this morning, look at Novo Nordisk. The stock is surging because the FDA approved the world's first GLP-1 weight loss pill. As you know, up until now, we've had these injections in this market, and this is giving the Wegovy maker an early edge over rival Eli Lilly, who's been dominant in the space. As you know, Eli Lilly makes Mounjaro as well as Zepbound. But this pill from Novo launched directly into the fast-growing cash pay market. It's bypassing insurance, goes straight to pharmacies, telehealth, the Trump RX site, and other online platforms. It's $149 a month, self-pay strategy, aiming to reignite sales growth as oral obesity drug competition heats up. Mark, when I had the CEO of Pfizer on, he said to me that he thinks this is going to be a $150 to $200 billion market. That's why Pfizer just acquired Metsera to get into this GLP-1 market, Mark.
I mean, it's remarkable. I can tell you personally, anecdotally, I have talked to so many people who are on GLP-1s. I never would have thought they would be on them, but it seems like almost everyone is on them nowadays. They're obviously very effective for weight loss. They're great at regulating blood sugar and insulin, which helps to prevent inflammation down the road, which leads to all other health conditions from dementia and Alzheimer's to cancer to heart problems. So they're obviously effective. I think they're here to stay. But one of the things I'll mention is that, you know, outside of Novo Nordisk and outside of Eli Lilly, I think it's important for investors to really understand the broader implications of how these GLP-1 drugs are going to affect society moving forward. I mean, you think about consumers making more health-conscious decisions. So going to a gym, maybe buying fitness equipment from a company like Dick's Sporting Goods is probably something you're going to see happen more. Avoiding sugary foods like Hershey's or sugary beverages like Coca-Cola or alcohol, because it also reduces alcohol cravings. So you look at companies like Constellation Brands, Brown-Forman. These kind of companies are going to be dealing with headwinds over the course of the next several years. So I think as it relates to GLP-1s, we have to really think about how is this affecting the consumers our lifestyle and society over the course of the next few years.
Yeah, that's great analysis. Meanwhile, I got to get your take on the Fed and rates, because interest rates this morning are still around 4.1% on the 10-year. We've got key debt auctions that could provide some insight into sentiment and U.S. debt and inflation. The delayed first estimate of the third quarter GDP is out this morning. We've got the 10-year at 4.15%, down 1 basis point. The expectations for the GDP this morning, growth of 3.3%. Not bad for a first read. Christopher, this is down from the 3.8% we saw in the second quarter. But, you know, the other day, Louis Navellier was on this program, on this segment, and he said, don't be surprised to see 5% GDP growth at some point in the first half of the year, Christopher. Is that what you're looking for?
Well, I think something north of 3 definitely seems to be in the cards, and you could see a one-quarter spike, Maria. I think that's on the right track, and that's very good for business, both from particularly anybody who's a lender, where credit quality is going to be better than expected, and that leads to better stock prices, and it overall is a good part of the S&P 500, with financials being the second leading index. So I feel that this is a very good sign, and I think even if it's more like 3 to 4, it's still very positive from the longer-term historical growth rate for GDP.
You know, it's hard to say that President Trump has not put the right agenda in place here, Mark. Look at what we're seeing. Oil prices coming off of the lows, inflation getting reined in, growth coming back as a priority.
Yeah. And just wait until you see what happens in the first half of next year. And maybe this is one of the things Louis Navellier is building into his projections. But, I mean, right now, we're expecting that consumers will receive an additional tax refund of roughly $150 billion, which that's going to lead to a much stronger consumer. So, you know, as an example, Maria, consumer discretionary, it's one of the worst performing sectors of 2025. I expect it to come out of the gates hot in 2026.
All right, we're going to be watching that for sure. Christopher, good to see you. Thanks for joining the conversation. Christopher Marinac, we will see you soon. Mark, you're with us all morning long. We are grateful.